Can somebody please give me a time machine? I'm trying to go back to 2014 and help myself out. No, but for real, honestly, had I had known the knowledge that I'm about to drop for you today, I would have been able to save myself a tremendous amount of time, energy, and money. I'm telling you guys, I've lost thousands of hours and tens of thousands of dollars in my process of learning how to become a funded and profitable trader. I got introduced to the markets back in 2014, and I'm here to tell you I have had my fair share of trials and tribulations. And in fact, that's why we went ahead and put this channel together, hoping to be able to help traders like yourself, dedicated to be able to drop in daily content to help traders find consistency within the markets. So with that being said, let's go ahead and jump into today's video. The very first thing I would tell myself is don't rush the process. The thing is I came into the markets the right time, wrong place, wrong people, wrong crowd, wrong influence, and wrong expectations upon the market. The thing is you see all these people on Instagram and on TikTok and on YouTube and Facebook flaunting all the money that they're making, and people are very quick to show you the money that they're making, but nobody's really showing you the money that they're losing. And the thing is you come in with these messed up expectations that you're going to get rich quick. And the thing is that's not quite really what it is, right? When I came into the markets, I was gung-ho on just making money overnight, making money hand over fist from trading. The thing is you can make money within these markets, but what people don't really talk about is how much you can actually lose. And that's the thing right there, is I came in with the wrong expectations, and I was consistently trying to rush the process, rush the journey. Every step of the way, I was thinking, when can I start my live account? When can I, up and start using a larger lot size, instead of actually focusing on the process and the journey that it is, right? You see people going and getting, very long-term degrees and, becoming a doctor or going to school for even, 2 to 4 years, guys. That's a commitment to, going and learning a skill set and a career path. But people come into trading and expect to be profitable overnight. And I am here to tell you that that's not how it works. I'm sorry to break it to you. Don't kill the messenger, but I'm going to tell you right now, if you're coming into the markets and you're expecting to make money very quickly, you're going to end up losing probably more than you'll ever make, and you're going to become a part of that statistic on about why 90 to 95% of traders fail. So the biggest thing I could tell myself first and foremost is do not rush the process, and I would like to tell that to you as well. Don't rush it. Give it some time. Make a commitment. Understand that it's going to take 6 to 12 months for you to truly start to understand the markets, how they work, to be able to train your eye for it, and be able to really just develop your edge over the market, right? Your strategy, and being able to stick to that strategy and develop the discipline. Trading itself, learning the terminology, learning, the chart, learning a lot of stuff, it doesn't take a long time. The biggest thing that you're going to struggle with first and foremost is your mindset. And if you're coming into the markets with the wrong expectations for it, you will lose a tremendous amount of money. The next thing I would tell myself is to go ahead, sit down, and establish my goals and figure out my identity as a trader, right? So what are my trading goals? What is it that I'm hoping to, achieve from trading, right? What is it that I'm really wanting to get out of it? And then I am asking myself, why is it that I'm wanting to get to that point? So for a lot of people, maybe it's trading a live account, right? Maybe it's, getting up to a certain amount of balance. For others, it's, passing a funded challenge, getting to the point where you understand trading, you understand risk management, and you have a prop firm that is willing to literally give you thousands and tens of thousands and even hundreds of thousands of dollars once you can prove that you have a solid trading system, you understand risk management, you understand risk to reward, and you are consistent, not only just as I'm saying, like consistently pulling profits, but consistent within your trades, within your trading plans, your trading risk, and you're able to actually become profitable. They will hand you money. I know this because I went through and I've taken my own challenge and I've received my own live account. The thing is you have to establish your goals first and foremost. What is it you're looking to get out of the markets? What are you looking to achieve? And then figuring out your identity as a trader. There's so many different types of trading, right? You have stocks, you have Forex, you have crypto, you have options, you have both binary options and stock options, right? There's futures, you have commodities, you have indices. There's so many different paths that you can take as a trader. You need to focus on one, follow one course until success. Figure out what type of trader you're going to be. What is the asset that you're going to be studying? What is the currency pair you're going to be studying? Figuring out what it is that you're going to be focusing your attention on. Because when you're first coming into the markets, you can't be scatterbrained trying to learn this, trying to learn that, trying to learn this, because a lot of these different things, they move differently. At the end of the day, a chart is a chart. If you can come in and you can focus on learning one, eventually you can start adding more pairs into the mix as you start to back test and study those as well. So really just sit down, establish your goals as a trader, what you're really wanting to achieve out of it, and then figuring out which path you're wanting to take, right? Coming into, establishing what type of trading that you're actually going to be able to do. And with that is figuring out, first and foremost, geologically, where are you in the world, right? If I'm here and my only time is, I'm on the eastern coast, the Midwest of the United States, and I'm essentially able to trade the mornings, I'm not going to be, looking at trading a pair that's, moving in the afternoons or the evenings, right? I'm figuring out my pairs. So for myself, I trade the New York London crossover, and I'm trading foreign exchange market, right? I'm trading currencies. So I look at pairs like Euro USD or GBP USD or AU, right? There's these different assets that you can look at, but I would say when you're first starting off, focus on one and make sure that it's actually moving during the time that you are allowed to trade. Don't try to fit trading into some crazy lifestyle or whatever, trying to wrap this all around. You need to make it fit, right? Make it natural when you're actually going to be able to study the chart, when you're actually going to be able to sit down and trade, right? And then you figure these things out, and then it's going to help you so much further. So that's kind of my point there for number two. The third thing I'd go ahead and do is just focus on learning all the basics, getting all the nuances out of the way, going in and learning a lot of the terminology, learning things like, what are pips, what is Forex, what is an asset, what is spread, margin, leverage, right? All these different things that you're going to be seeing, as you're jumping onto MetaTrader 4 or you're jumping onto these different platforms. You need to be able to learn the terminology of what some of these things are going to be. Just get the basic stuff out of the way, get it going, because there are things you're going to need to know later. Really focus on understanding, things that are going to really be able to help you out, like the leverage, like margin, risk to reward, risk management. This is all going to come into play later, right? So really get those basics out of the way. There's a lot of different resources out there. Obviously here on YouTube, you have Google, there's Baby Pips, there's a lot of different trading communities out there that have structured education and learning, so you can go through and knock out those very basics and work your way down, right? There's a lot of different platforms out there to really just get that easy stuff out of the way, get that part out of the way, and then we can start to jump into some more of the important stuff. Once you've went ahead and you've got all the basics out of the way, it's time to start learning some technical analysis. And this is where I tell people, you don't want to jump in and try to start learning all these different indicators and all these different things that you put onto the chart, and it gets all crazy and messy. I'm sure you've probably seen some of the photos of all these different things. You don't want to jump into that. One of the first things you want to do is just get yourself familiarized with the chart. What is the chart? What does it look like? I've actually went ahead and put an entire playlist together for beginners. You guys can feel free to go ahead and check that out. It's pinned right up on my main page. But go through and look at this stuff, right? What is TradingView? How do you read a chart? What are candlesticks, right? Starting to go in and learn very basic things like price action, how to read candlesticks, right? The open, high, the low, close. Starting to learn, how price is actually moving, different time frames and how an actual candlestick works, right? These are going to be some of the very basic things that you need to go ahead and get out of the way. And these are things that I would focus on as well, right? When I first got into the markets and I got introduced to different charts, I seen everybody having all these different indicators on and these flashy things, and they look so cool, and I wanted to learn them, but I skipped over some of the most important things, and that's being able to look at a chart for what it is, right? Being able to look at a naked chart and learning price action itself. Guys, this is going to be so freaking crucial, and you'll skip leaps and bounds by not jumping right into all the other BS and focusing on the things that matter, starting to learn the basics, go through step by step, enjoy the process, enjoy the journey. Does it suck along the way? Yeah, it does, but there is light at the end of the tunnel, and you have to go through and enjoy the process. You have to go through and learn these things and get them out of the way, right? So once you get yourself familiarized with the chart, once you start to learn price action, the next thing I would say is start to go in and jump in and learn top-down analysis. Start learning market structure, figuring out the story, right? Starting with those higher macro time frames and working your way down and seeing how price fluctuates within that, right? Starting to learn some of the macro all the way down to your micro levels, and being able to see some of those smaller time frames and how price reacts. You could see on a macro time frame that price is extremely bullish, meaning that price is going up, but on a micro time frame, you can see that it's actually bearish and in a retracement, right? So there's these different things that you need to go through, and this is part of the process, is that top-down analysis, starting to learn market structure, researching things like institutional market structure, right? Being able to go in and learn some of these more bigger macro time frames from a different perspective. And from that point, I would go in and start to learn supply and demand, right? Seeing how, price really starts to fluctuate. People like myself and you, we're what's known as retail traders, people who don't necessarily have enough money to make a big impact on the market. But there are things that are known as supply and demand. You'll have institutional traders, things like banks, large hedge funds, people just trading very large accounts, coming in and making big moves within the market. And these are areas of what we call supply and demand, where you have a surplus of sellers or a surplus of buyers coming into the market. And these are going to be crucial structure points for you. So being able to learn how to first and foremost identify supply and demand, know what it is, and then being able to, just fully understand it and spot it on a chart. And one of the biggest tips I can give you guys is when you're going through this process and you're learning the chart and you're watching these videos, implement what you're learning, train your eye for it. Don't just watch one video and be like, I'm a genius, I've got this, I'm good to go. Because you watch a video and as somebody's breaking it down to you, it may make sense, yes. But once you jump into a chart and your chart don't look like theirs and price is a little bit different, you're like, man, maybe I don't know supply and demand, right? And this is the thing, is you need to go through and start to identify some of these things and start to watch it, right? And that's why I was saying it's important to figure out what asset it is that you're going to be trading, so you can be learning on that asset. You can start to train your eye for how that asset moves, and that is going to be very crucial. So learning something like supply and demand early on is going to be very crucial, especially when you're going through and you're learning the price action, you're learning market structure, you're learning the change of market structure, and you're going through into supply and demand. And then the next big thing that I would say that you guys absolutely need to go through and learn, and something that I wish I would have learned early on, is something like liquidity and imbalances, figuring out where price is going, right? I was told early on, not early enough, that if you can't spot liquidity within the markets, chances are you are the liquidity within the markets. And it wasn't until I actually started to learn liquidity where I had that aha moment, and I was like, wow, this is why retail traders get stopped out so much, because a lot of price is manufactured price action. It's all algorithmic trading, right? And you see this stuff coming into the markets and you see where these banks are going. You have to realize when it comes to trading, when you're making money, it's because some other individual is losing money. So when you take a look at the foreign exchange market, you have over 10 million traders worldwide, plus you have all of these different institutions within the markets. 90 to 95% of traders fail, yes, and most of it comes down to, not having a trading plan, not having proper psychology, not, having the proper mindset and risk management and risk reward, things like that. But, once you've actually solidified all of that, you take a look at it, the people are making money off of other individuals losing. And you see a lot of these different things getting set up. Learning how to identify where there is liquidity in the market is going to be able to save yourself a lot of money. And the big thing I would say is when you're learning liquidity and inefficiencies and imbalance or fair value gaps, all the same thing there. Essentially what you're looking at is those different supply and demand levels, right? Myself, I don't necessarily look at a supply and demand level as a point of interest if there's a tremendous amount of liquidity, sitting just below or above my entry there, right? Depending on which way I'm looking for the trade to go. So being able to not only start to learn some of these smart money concepts, but also learn where people start to lose a lot, right? This is going to be a big thing that's going to help you out. And this is something that I had really wish I had learned early on. The next thing I would say is, as we're on the topic of institutional trading, is starting to understand some of the market cycles and how the market moves, along with that being some of the retracements, right? Learning some, more of shallow versus deeper retracements, learning things like Fibonacci retracements, right? Starting to look at some of those key levels. Me personally, I look at anything between 0.50 as a retail retracement, right? A 50% retracement and less is just simply a retail retracement. A lot of times is I see some, manufactured order blocks or, supply and demand levels, there, but there's typically liquidity resting below or just above it, which is going to push into that deeper retracement, stopping out a lot of retail traders. And these are things that I really wish I would have understood before, understanding these market cycles, understanding how price really moves and how these banks operate, right? You know, a lot of times you see what's known as consolidation, right? With market moves in three directions, moves up, moves down, and it moves sideways. And the thing is when price is moving sideways, you have to understand that a lot of times that's setting up for a bigger manipulation, right? So being able to just understand things like that would have just helped me out tremendously. The next big thing that I would focus on before I even ever open a trade, granted, at this point, if have I restart, I'm in $0. I'm in $0, haven't risked anything, haven't put any money into the market. And the big thing that I would study at this point before ever even doing that is proper risk management. I actually just went ahead and dropped a video recently, and I'll go ahead and pin that thing below. Be able to understand risk management, guys, is very crucial, especially if your goal is to become a funded trader. If you want to get to the point where people will hand you money to trade and profit split it with you, you have to understand risk management. Even if you're looking to just trade for yourself and, you know, one day be able to have a live account and become profitable within that, risk management is going to be a crucial piece. You need to understand risk management. Don't be in a hurry to lose money, please. Risk management is such a crucial piece, and I overlooked it for the longest freaking time. I've seen people, you know, go through and just say, hey, leverage 10% of your account, 20% of your account, 30% of your account, 5% of your account, whatever, all these different percentages. And then you have people that are just trading buck wild without a stop loss. I was extremely guilty of this for the longest freaking time, and is one of the most toxic things that you can do for your entire trading career. A lot of times, you know, you go through and you start to learn the trading process and you start to take some trades, and you start to go through and you see you're getting stopped out by 1 pip, 2 pips, 3 pips, and you tell yourself, I just need to give it a little bit more room to breathe. I just need to give it a little bit more room to breathe. While trading the same lot size the entire time, you don't realize you're opening yourself up to a tremendous amount more risk. So what you need to do is you need to go through and you need to start to understand risk management, understand lot sizes, understand leverage and margin and what it is that you're going through. And then from there is being able to understand that you need to use very little risk. You can't go without a stop loss. You go through and you try to let it breathe time and time again. What's going to happen is you keep moving that stop loss. You're going to keep giving a little bit more room to breathe, a little bit more room to breathe. Before you know it, you're either going to completely get margin called, or you're going to lose so much freaking money. You're going to be like, man, why did I do that? Why did I knew that I had my stop loss up there before and I kept moving it? Or you go through it and you're like, hey, let me just use no stop loss. I'll keep an eye on it. And then next thing you know, your boss calls, or your kid wants something, or, whatever happens. And then boom, you realize, hey, your entire account got blown while you're off doing your chores or taking the trash out or doing whatever, because news came into play and you didn't, see that part, right? So you need to understand this stuff. Risk management is so crucial. If you want to be able to trade a funded account, you need to learn this. You need to learn how to calculate your lot size. You need to learn how to understand how much you are actually leveraging. And then the big piece is just understanding risk management in itself. On my video, I talked about it when I went through and I took my funding challenge. I did not risk more than 1% of my account on the entire phase 1, phase 2, and then even into now having the live account, not risking more than 1%. This is something that you guys need to be able to understand. Very minimal risk. You're not exposing yourself to a whole bunch of risk, and you're limiting it, right? And being able to go through and just understand that is going to be crucial. Now, once you've gone through and you've started to be able to, develop a little bit of a strategy, you start to learn a little bit more on the charts, you start to, understand the market and how it moves and how it operates, and you've been training your eye for it, the next thing is going to be to go through and develop a strategy with rules. And this is going to be, very crucial to be able to lead into our next topic, which is going to be developing a trading plan. But being able to develop your strategy, whatever it is you're going through in your trading, whatever it is you're learning, by now you should start to be able to develop some rules. And this is going to help you build out your trading plan. My trading plan works really well for me and my strategy. It may not work well for you, right? You need to go through and figure out what it is, because when you start talking about adding in all these different indicators, and all these different confluences, it starts to get a little bit messy, and you need to be able to have a rules-based system and understanding your strategy to the T and how it works. You can't watch one video on exponential moving averages and be like, I'm good to go there. I just need to look and see if there's a death cross or a golden cross, and that's a confirmation, or if, you know, it's bouncing off of this support or that, right? There's so many different things, and so many different things that can get added in. It can get really messy very quickly. So as you're learning, you need to start to build up that confidence. You need to start to build up that strategy and the rules, and that's what's going to be able to help you go through and formulate your trading plan, your true rules-based trading plan that you're going to be following and having the discipline to follow. Because I'm going to tell you right now, if you fail to plan, you are planning to fail. You need to have a trading plan. You need to have a checklist. Before I go through and enter any trade, I ask myself, is it during my trading session? I ask myself, does it, you know, lay within a point of interest that I've already marked out, you know, prior to my trading session? Am I in one of my points of area of interest, one of my macro, you know, supply or demand levels, or are we sitting within an inefficiency, right? Like what are the rules for where price is at? Am I just jumping in a trade to be in a trade? Am I jumping in a trade because I seen, you know, some sort of market impulse? Am I getting FOMO, right? There's a lot of reasons why people just click buy or sell, that you need to go through, and you need to develop these rules. There's something that you can go through to where you have consistent risk. Because if you're all over the place just jumping in a trade because you got excited here, jumping in a trade because somebody told you to here, jumping in a trade because this signal went off or that, you know, you're going to be all over the place, and you don't have consistent risk. You don't have anything to go off of. So if you truly want to be a profitable trader, you want to get to that point to where, you know, you can actually make something of this, you need to sit down and you need to have the discipline to develop a trading plan that goes through and it really, you know, aligns with your strategy. What are your confirmations for getting into the trade? How much are you risking on the trade? What is your stop loss for the trade? What is your target for the trade? Where are you going to take your partials for it, right? And then a big thing that a lot of people, you know, forget to put into their trading plan is doing an emotional checklist, right? How am I feeling? Am I, you know, currently like pissed off because I took a major L the day before, or I just, you know, starting to revenge trade? You know, am I, you know, all worked up because I got in a fight or did whatever? Or am I, you know, overly excited, like, heck yeah, I'm trying to get this money, whatever? Because you don't want to be all over the place, high emotions or low emotions. You want to come in with a nice even keel and say, hey, I'm going to treat this thing like a business. And at the end of each and every single day, your goal should be able to say, I followed my trading plan. From at the end of your trading session, your goal should be able to say, I followed my trading plan. So going through and having that emotional checklist, going through and having that checklist that follows your rules is going to be something that's very crucial, right? Why is it that you're looking to take this trade? Are you taking a long? Are you taking a short? What are the reasons that you believe price is going to go in that direction, right? You know, and this stuff is going to be crucial, because then what it does is allows you to come back on it later on. So once you've developed that trading plan, then your next thing is not to go and create a live account. In fact, it is to do the opposite. It is to go and back test and paper trade, demo trade, jump into the charts. Now that you've developed a strategy, now that you understand risk reward, now that you understand how the market moves and price action and just all this stuff, what you're going to want to do is just really start to train for it as if you were trading a live account. And again, going back to your goals, if your goal is to get a funded account, go and take a look at, you know, the platforms. Are you going to be using Top Tier, FTMO, or My Forex Funds? You know, what platform are you going to be using? What account can you afford to go through? What is your goal at the end of all of this to actually shoot for? If your goal is to go get a $100,000 funded account, go ahead and open a $100,000 demo account and start trading during that trading session, trading that asset that you've been studying with that fake account, that demo Monopoly Money account, and trade it the exact same way you would as if it was a challenge. This is the exact same thing that I did to pass my funding challenge. I traded with the same account, with the same rules, risking no more than 1% on any given trade. And I went through and I followed my rules. I went through my checklist. I looked for my opportunities. I became very patient in my approach, and I became very calculated on which trade I took, right? Because I'm looking for quality rather than quantity, right? This isn't just some numbers game where if you press buy and sell a bunch of times, it's going to average out and you'll make money. That's not how it works. right? So what you need to do is you need to go through and start to back test this, and you need to start to demo trade this, right? We have access to decades and decades of data at any given point in time. You can jump on a trading view and smack that replay tool on any asset and scroll back, and you can go through and see it as if it was real live data. And this will go ahead and improve your trading tremendously. If you take back testing seriously and you're doing it with your rules and you're going in blind, you can go ahead and you can take a look at price and you can say, hey, do I see a trading opportunity right now, right? If not, let's go ahead and let price lay out a little bit. Okay, now I'm starting to see something. We're developing some liquidity, or maybe I see an inefficiency. I have my points of interest here. Okay, now we're coming up into this point, and you follow these same trading rules as if you would a live account. You look for your confirmations, you mark it out, and then you go ahead and you drop a long or a short position tool on that point, and you see, okay, this is my stop loss that I would use. This is where I would look for price to go for. This is how much I would leverage, and you're writing this stuff down, just paper trading, and you go through and you let price play out. And then you see, did you get stopped out, or did price go your way? And you're just slowly letting these candles come up, and then you say, okay, right now I'm at a 1 to 3. I'm going to go ahead and take partials, or I'm going to move my entry to stop loss. And you would literally just play this out as if you were live trading. And guys, I'm going to tell you what, this right here will help you out so much. And I'm so mad at myself because I did not do this stuff early on. I got introduced to the markets in 2014. I wasn't profitable until 2020. I didn't start to see my real growth until 2021, and then I had a major explosion this year here in 2022. Guys, this is the stuff that you need to be able to go through and focus on, and I really hope that you're listening to me on this, because this is going to help you out so much freaking further. And after you've gone through and you've started to develop your trading plan, you've started to back test and paper trade it, the next thing that you need to do is just focus on the discipline. The discipline to stick with your trading plan, guys. This is going to be so freaking crucial, and it goes back to, reading through your goals, reading through your why you originally got started into this, because as you're preparing to go and, take your funding challenge or create your live account, you need to go through in this and keep that same discipline, that same level of respect for your early self on, really just wanting to make this thing work and treating it like a business, guys. I can't say it enough. Discipline is going to be the biggest thing. Everybody looks for motivation, but having the discipline and dedication, that's what's going to keep you forward. That's what's going to keep you trading. That's what's going to keep you going through all these different hard times. So when I'm having a hard time, I look at why I'm doing this. As a father, a husband, I look at this stuff and I see my need for being able to provide for my family. I see my need for being able to go through and pay forward, right? I went through all my different trials and tribulations, and my goal is to be able to become an even better trader each and every single day, so I can continue to learn and grow and take that knowledge and pay it forward to somebody like yourself, right? So this is going to be a huge piece, is that discipline to stick with it. And then my last piece that I want to leave you with here is a piece that I actually got out of the Army's playbook. When I was in the Army, we'd go through and we'd do something that's called an after action review, and we'd do it after each day, each mission. We'd go through this, and I apply this within my life here with my wife, with my goals, and I apply it within my trading plan. And that's going to be going through and doing that review, right? When I was talking about doing that trading plan before, I was talking about writing it out, having a checklist, having something to come back on later and go off of. And that's going to be because you're documenting your trades, having a trading journal, having something that you're going through within your trading plan, and you're marking this stuff out, and having that after action review is going to be a crucial piece. So for those of you that haven't served, or maybe you don't know what an after action review is, let me go ahead and break it down for you, and it goes something like this, right? And this is how I apply it to my trading. I ask, what was supposed to happen? Well, what was supposed to happen was, me first and foremost following my trading plan. I take a look at the trade, was it a long, was it a short, what was it supposed to do, what was my entry, what was my stop loss, and I'm going through and I'm reviewing this trade. Whether I won or I lost, I'm still reviewing this trade and I'm taking a look at it. And what I'm also doing is I'm asking myself, how did I handle my emotions during that trade? How did I, handle myself, during this trading session? Was I getting super euphoric? Was I getting really depressed? Was I getting really anxious? or just impatient, right? These are things that you need to document while you're trading so you can come back here and take a look at it, right? So you ask yourself what was supposed to happen, and then you ask yourself what you did well. Maybe you handled your emotions really well. Maybe, you were able to, this time focus on actually using proper risk management, or, starting to take some partial profits, or moving your stop loss into break even, right? These are some very important things that you need to take a look at, and you ask yourself, what did you do well? Now, after you've went through and you've given yourself a pat on the back and you identify what you did well, the next step is to be very humble and honest with yourself and ask, what did you not do well? Maybe you didn't, use proper risk management. Maybe you jumped into a trade with some, impulse, and maybe, you didn't handle your emotions correctly, right? There's a lot of different things that we can fail at. Maybe you failed to identify a higher level point of interest, or maybe you failed to go through and apply fundamentals and understand that it's a high impact news day for your asset, right? There's a lot of different things that you could do wrong, and you ask yourself what you could do wrong, and you write this out, right? And then what you do is you ask yourself, what could you have done better, right? And you go through and just identify this, so now you have something to go off of. And I go through and I do my after action review, and then on the next morning when I go and I get ready to trade, I look at my previous day's after action review and I ask myself, what was supposed to happen? What did I do well? And I look at those points of what I did well so I can carry that into today's session, because each and every day I'm just looking to progress a little bit more, a little bit more, a little bit more. And then I ask myself, what did I not do well yesterday? Why? Because I want to become better today. Whatever I didn't do well yesterday, you can best believe that is what I'm focusing on doing better today, because I'm looking to improve, right? So this is going to be a crucial piece to you guys. So if you're looking to just become profitable, or you're looking to do really anything in your life, applying an after action review is going to be very crucial. And I highly suggest that you document and review each and every single one of your trades. But with that being said, guys, I hope this video was able to help you out. These are all things that I would love to just jump into that damn time machine and go back to 2014 and tell myself, but I'm not able to unfortunately do that unless one of you guys got a time machine. Hit me up. You guys see, feel free to shoot me a message. I'd be happy to borrow that thing. But honestly, hopefully you're able to get some value from this video. If you want to enjoy more free videos like this, more free content, please, by all means, go ahead and smash that subscribe button. Turn on the bell notification. We're dropping daily content for traders, looking to be able to help you find that consistency within the markets. If you have any other questions, feel free to drop comments below. Let me know what you got from this, and I'll see you guys in this next video.